Imagine a world where the government can access your bank account at any given moment without needing your consent. This is no longer a distant possibility, it's already here. The Social Security Administration, SSA, has quietly rolled out a new emergency policy, granting them sweeping power to monitor your financial activity, starting with low-income seniors. And make no mistake, this will extend far beyond that. If you are one of the millions receiving benefits, be it SSI, SSDI, or retirement payouts, you need to listen carefully. The emergency directive, known as EM 25046, has already gone into effect. It marks the beginning of a shift in how the government will surveil financial data, and it's a game changer. This internal policy was initially designed for SSA personnel, but it impacts anyone relying on federal benefits. It begins with seniors aged 65 and older, who rely on supplemental security income, SSI, purely due to their age and poverty. These individuals have predictable financial profiles, making them easy targets for government monitoring. If successful, this will set the stage for a broader crackdown on millions of Americans who are already vulnerable. This policy isn't about fraud prevention. It's about control. It's about shifting the balance of power from individuals who are entitled to government assistance to an agency that now has real-time access to your financial records. The government already uses a process known as Access to Financial Institutions, AFI, but until now, it was used sparingly, usually only when there was suspicion of fraud. With EM 25046, AFI is no longer a last resort. It is now the standard procedure for verifying financial resources. The consequences are terrifying. Millions of people who rely on SSI benefits could see their payments interrupted, delayed, or even suspended over minor discrepancies. Even the most harmless financial event, say receiving a small gift from a loved one, could trigger an investigation. The fear is that small, unintentional mistakes could lead to irreversible damage. Imagine losing your benefits over an accidental transaction. Something as simple as a family member sending you money, pushing your balance above the limit. For someone already living paycheck to paycheck, that could be catastrophic. It begins with the most financially vulnerable. Seniors who receive SSI purely based on age and poverty. These individuals are more easily monitored because they typically have fewer financial variables. The SSA can scrutinize their assets and easily determine if they're violating the $2,000 cap on resources. But it's not stopping there. This policy will soon roll out to millions more. People receiving SSI due to disability, immigrants claiming benefits, SSDI recipients, and eventually retirees. It's a well-calculated plan to start with a group less likely to resist and then expand to those with more political weight. In the end, the SSA could monitor the financial activity of every beneficiary in real time, tracking income, savings, and spending habits.
The problem? This shift threatens to leave the American public in a precarious situation.
What's more alarming is the way this policy erodes trust in the Social Security system. The SSA claims it will reduce fraud by identifying overpayments and preventing improper claims. But what they aren't acknowledging is the risk of penalizing honest citizens. If someone unknowingly exceeds the resource limit by a mere $1, they could be subjected to a full investigation, benefit suspension, or worse, demanded to repay the overage. Under the previous system, any balance under $400 wasn't subject to scrutiny. But now, that threshold is meaningless. The SSA has the power to investigate any amount, no matter how small. Even an accidental deposit could trigger an investigation that could last for months. And for many recipients, that means long stretches of financial uncertainty and emotional stress. These sudden audits could cause havoc for people who live on a razor-thin margin. When benefits are suspended or delayed without warning, it's not just a minor inconvenience, It's a matter of survival. The new directive goes even further. The SSA now has the ability to search for accounts across the entire nation, including international banks, if they suspect funds are being hidden. They can even examine financial accounts tied to your family members. If your spouse or child has assets or makes regular payments to you, the SSA can use that information to determine whether you're still eligible for benefits. What started as a simple process to track one's financial eligibility has now ballooned into full-scale surveillance of every financial detail, even those of relatives who may have helped you. And it doesn't stop at just the direct beneficiaries. The SSA can now take a more aggressive approach to deeming, which means examining the financial status of the entire household, including spouses, children, or anyone else deemed to contribute to the household's income. It could be the end of personal privacy for millions of families, who may suddenly find their financial stability threatened by the very system that was designed to help them. The greatest fear, however, is what this could mean for the future. This policy doesn't just track what you've earned, it tracks what you have now. The Social Security system was originally designed as a reward for years of contributions to the economy. But what if that changes? What if Social Security begins means testing, taking away benefits from those who have assets, regardless of how much they contributed over their lifetime? Those who have invested or saved over the years might find their benefits slashed, while those with less wealth might continue to receive full payouts. Such a division could spark a dangerous debate over wealth and inequality. This is no longer a hypothetical situation. It's already in motion. If you think you're safe, think again. With automatic access to your bank account, any discrepancy could lead to massive consequences. A small mistake, a temporary deposit, or an accidental transfer could cause your benefits to be suspended without warning, leaving you to deal with the fallout on your own. And here's the chilling truth. The SSA is positioning itself to track every penny, every deposit, every withdrawal. The financial autonomy of millions of Americans is at risk, and for many, this new policy will be nothing short of a nightmare. What happens when real-time surveillance becomes the norm for financial benefits? Will we face a future where your wealth, or lack of it, determines your access to Social Security benefits? The question is no longer if this will affect you, but when. If you found this eye-opening, subscribe for more updates and share your thoughts in the comments. Do you think real-time financial surveillance is justified for Social Security recipients? Let us know what you think, and stay tuned for the next critical update.